And also for those who didn't get the email, this is going to be another announcement. If you didn't get the other announcement, is that I step aside as a lead trainer on February 14th, 2015. And then after that, Jenny takes over. For those who don't have the luxury of knowing Jenny like I do, she is fully capable. As a matter of fact, she is a better trader than me, both as the point I was at that moment, and even sometimes now, her performance is actually better than mine now. She was one of those rare people who she took the course, didn't ask any questions. We didn't hear from her. And then, several months after she had joined, she sent us her email about how well she was doing. She's owned her own business before. She's been scammed. We actually learned from some of the same people as far as real estate investing and have some of the same experiences. So, our DNA, I don't know if it's DNA or personality makeup, is very similar. So I always tell people, if you have a particular fondness for me, you're most likely like Jenny in the way she thinks also. So just wanted to assure you, you are going to be in good hands. And I'm not disappearing per se. I'll still be pouring into people's lives, but not in the same fashion that I'm doing right now because, excuse me, our family's going to go through a transition period where we decided that we want to go on more missions trips and we're going to homeschool the kids. I know I won't be fully available to serve you in the capacity that I'm serving you in now. So it's best for me just to step aside and let Jenny do it since she'll have more time. So just wanted to reinforce that for those who didn't see the last email. Now, real quick, we're going to look at the big three. If anybody's been halfway paying attention to the market now, the market has gone nowhere for the entire year. It's literally just gone nowhere. And I decided today, I just reached this piece where I'm really at peace with the stock market, and I'll give you some of the reasons why I'm at peace with the stock market, even at peace with my performance, which I'll cover here in a second. And Fernando, I see your comment. Thank you so much. It's just saying Jenny's a good person, so he's all good. Oh, real quick, let's look at those some paper trades there. So let's look at the S&P 500. And let's look at, I wanted to look up a 5-year history at S&P. And I caught myself whining today, being a big baby about my performance and about the stock market, until I reminded myself that since, 2009, the market has gone up. Maybe not straight up. We've had some moments of panic here and there, but 5 years of upward movement. And I've literally profited from that movement for the entire 5 years. So 5 years compared to 3 months is absolutely nothing. And so I realized that today I have to keep things in perspective. And this is just a 5-year chart. If we were to pull up a longer chart from the stock market's entire history, if I pull up all right here, we will see that even with the Great Depression and everything else, the stock market has gone up. Doesn't mean it's gone up in a fashion that we like it to go up in, but it's gone up. And so lately, if we pull up a 9-month chart here, we will see that since the beginning of the year, which is about right here where, matter of fact, let me do a circle here. Since about here, this was where the stock market opened for the year, and where it's at right now, it's literally gone nowhere. And so buy and hold investors are panicking. They're kind of frustrated. Even investors like us who are option traders who can make money, during a market like this. We can make money when stocks go up, when stocks go down, and then when stocks go nowhere. Even traders like us sometimes can get frustrated. I am one of them. I have a few students who are doing pretty well. They're up 16% so far. I think one may be up 30. I'm not sure. And they're in and out shorter term traders. But I'm more conservative. So I'm pretty much break even with the market right here. And like I said, I'll pull up my trades here in a second. And what else I thought about today is this is the kind of market that separates the winners from the losers, and it separates those of little faith from those of great faith. And I received one email from a guy who told me I should short the market and and all this other stuff, and I was like, what? I don't see that. It could happen, but me, I'm like, I trade what I see. I don't try to predict the future because you can get in trouble with that. And this market is the kind of market that's going to predict futures. It's going to predict who's going to be wealthy and who won't, because I say I can't lose faith. I can't lose my patience. I can't get all emotional because that's what others will do. And I have to stand strong and be, a rock and a solid foundation. And remember, again, going back to that 5-year chart I just showed you, say, you know what, this is just a blip in time compared to what the stock market has actually done. And I have forgotten about the last 2 years of profit I've made, and all I'm focusing on is these last 3 months of frustration with the market. So today I said, you know what, I'm going to put my big boy pants on. I'm not going to complain anymore. I'm going to be an adult and look at reality. The market has gone nowhere in 3 months. Okay, so what? It is what it is. I have other areas in my life I can improve upon. I can focus on my marriage right now. I can focus on being a better husband, a better father. So I will do that while I wait for the market to sort itself out. And the reason I have to wait is because most of you know I'm a primarily trend trader. I trade when the market is going a consistent direction. That's when I am at my best. Some people can trade in these sideways markets. That's just not my specialty and not my skill set. So I'm the person who can trade best when the market is actually picking a direction. But when it's doing nothing like this, I am pretty much handicapped, and my performance actually dictates that. So looking at my long-term account, I updated it today, so I'm pretty much break even here. And looking at the market is about break even. And so let's look at where the market actually closed on January 1st. January 1st or January 2nd is the first day of this trading year. The market closed at 1831, and the market closed today at 1849. So it's literally right where it started the year at. And if you look at my account, that's where it's at too, as of today. So I've done a lot of trading throughout these months, but it's been, back and forth, just like the market. I've made some money, and this last month is where I'm down now. The only part of my portfolio that's actually performed okay is the set it and forget it strategies, the long-term strategies where I don't manage them. I just place a trade and let it do what it needs to do. That's the only part of my portfolio that's been consistently profitable, and I haven't lost any money on that. But it's the active part of my portfolio where I'm doing like credit spreads and call options. That's the part of my portfolio that's dragged it down. And when you look at the market, you can see why. The market hasn't gone anywhere. And when you do those calls and puts and those strategies where you need the market to move, well, they don't perform as well when the market is going sideways right now. And so my short-term account is actually down as of today. It's down about 8%. So this part of my portfolio, this shorter-term account where I do the riskier strategies, that's actually underperforming the market by about 8%. And so I had a conversation with Jenny a few days ago, and she even reminded me, because I was complaining. She's like, you know what, cash is a position too. And she was saying that she had to remind herself that because she was getting agitated and kind of itching to trade, or antsy, not agitated, but kind of antsy to trade. And I said, you know what, you're right. And so that's what I've been doing. I'm in actually one trade right now, one short-term trade, but it hit my stop loss, which is actually Starbucks. I'm most likely going to exit that tomorrow. And other than that, I'm going to be in all cash. And I have to eat my own words, because cash is a position. A lot of newer investors don't realize that. They look at cash as a handicap, like, I should be doing something. And Warren Buffett is one of the people we should learn from, because sometimes he sat on billions of dollars of cash like a few years ago, and then during the last market crash, he just stepped in and just started buying up stuff left and right. He sat on cash for 2 years while everybody made fun of him and told him he had lost his edge and all this other stuff. And I'm sure he was just smiling and just saying, just wait. And so I just have to be like that now, just sit in cash, let everybody else stress, let everybody else try to force trades, and just kind of wait until the market sorts itself out. All right. Now, where do I think the market, with all that being said, where do I think the stock market is going to go? You know my answer to that. I don't know. I don't care. That's not the way I trade. And I'm honestly absolutely have no clue. If you had asked me at the beginning of this year if I thought the stock market would go nowhere for 3 months, I would have told you, nah, not like this. So I don't know. I really don't know. It just looks like it's settling out. There's a lot of stuff going on in the economy. So I think people are kind of both, optimistic and both fearful. And so that's being reflective here in the stock market. So we will just sit and wait. All right. Next question is, I will let you know if the indices are showing signs of a start of recession, correct? Like in between calls. I doubt it, but you never know. No, I won't let you know because I taught you it already. No, I'm just joking. the safest response is that, and this is one, you know what, thank you for asking that question, because I was talking to Jenny, I was talking to my wife. I said, here's what I think will happen once I step away. I think that you all will become more successful. I think the program success rate will go up even higher than it is now. The industry has a 90% failure rate for traders, and yet we've been able to have a 63% success rate, according to a survey I sent out to people at the end of the year, whether they're making money or not. And I think that I don't want you all, don't take this in a negative way. I don't want the program to become groupie-ish, where everybody's waiting on Travis to tell them what to do. Yeah, I have about 10, 11 years of experience. But you know what? I've literally taught you everything I know, and I don't want you to become groupie-ish where you wait on me to tell you what you know and what you can see, okay? Because I believe you can spot the market trends just as well as I can, like Facebook. If anybody been following Facebook, it was no surprise to me that Facebook is going down. Why? Because we could clearly see it. It happened slow enough. Prices were going up. They flattened out here. And then the moving averages just kind of slowly started turning over, okay? Then we're like, okay, prices were stagnant, then they were turning over, and then they just kept going down. Even if we were to draw a simple trend line here, we see that prices were going up, and then they slowly broke their trend line, and then they started going down. You all know how to do this simple stuff, and if I wasn't there to tell you this, you would do it on your own. But that was my long-winded answer to say, yeah, of course, Fernando. If I think the market's turning over, we're headed to a recession or a bear market, yeah, I'll let you all know. I'm not going to leave you hanging. But it's best that you come to your own decision on what you think instead of waiting on me. All right? So I hope that answers your question. Kasim says, groupie for life. All right. Okay, the next question here is, they said, in the training, I say to stay away from weeklies as far as trading directionally, and that, but what about other strategies like the cover call ETFs and selling puts on stocks that I think are strong? I notice on the selling side that premiums can sometimes be more lucrative if you sell a cover call or cash secure puts on a flat line trading stock with only about a week left in the contract's life. Yeah, and I don't necessarily say stay away from weeklies altogether, because I trade weekly options, and weekly options, for those who are new, are these ones here that expire in 1 week or in a few weeks. They're different than the regular expiration ones that aren't red here. The regular expiration ones are the ones that are not red. I do trade weeklies. What I usually say is for newer traders, stay away from weeklies, because when you're new, it's so much to keep track of. Weeklies can just become a minefield of losing money. And they give no room for error. I mean, no room for error. So when you make a trade on a weekly, whether you're buying a directional trade or call or putter, you better be prepared to lose all your money. Because if the stock doesn't do what you want it to do within that short period of time, you have no repercussions. There's really nothing you can do, to try to fix that trade or try to recoup any money you lost. That's why I always tell newer traders to stay away from it. They're tempted because of the exact nature of this question. The exact nature of this question was like, hey, I noticed that on the selling side, the premiums can sometimes be more lucrative. And if you all attended last call, I said last week, what did I say? Don't be seduced by the profit prostitute. We're always seduced by making profits, just like some people are attracted to, I get kind of X-rated here, but, think of it that way. I always say people, an example I use, bless his heart, I wish him well in life. I hope he learns his lessons. But the example I used last week was Tiger Woods. I was like, you know what? I hope that he, came to the decision that all those, sleeping with all those women just wasn't worth it. Just wasn't worth it, losing his family and all that. And sometimes we can get so seduced by the allure of something that looks attractive, in this case, profit, that we never consider the opposite end. Like, what could actually go wrong? And so, yes, it can be more lucrative, and this is why a lot of newer traders are attracted to weeklies, because when you trade them, yes, you can make more money trading weeklies, but on that flip side of that, you can also lose more money. But when it comes to selling options, if we're selling options on a stock we want to own, then yeah, you can do that actually. It just depends on your trade plan. And in this SPY trade I was looking at here, I did actually, if you see here, I sold the weeklies. I sold the weeklies with 14 days left to expiration. It was a stock I wanted to own, and like Warren Buffett and every other stock, I got paid. I absolutely love this strategy. You get paid to buy a stock you want to own. Really, I got paid $800 to buy a stock I was going to buy anyway. And so I sold these weeklies here. They just happened in my favor to all expire worthless except this last one, and where I got assigned and I had to buy the stock. But I got paid almost, $900 to buy a stock I wanted to own anyway, because I sold stock insurance to people. This is the way you need to look at put options. They have insurance on cars, insurance on homes. A lot of people don't know they have insurance for stocks, and they're called put options. I bought I bought SPY for $190. Now, right now, if I wanted insurance that prevented that would guarantee that I wouldn't lose any money, I would come in here. You won't see it on this chain. I would come in here and buy a 190 put option. That guarantees me that I can sell, because if I buy an option, I have rights. That gives me the right to sell SPY at 190. Buying that put option guarantees I can't lose money. I bought it for 190. I can sell it for 190. Granted, this option expires in 22 days, so that insurance contract only lasts 22 days, and it cost me $500 to buy it. So, I would have to pay that premium, so technically I would lose that $500, but that's insurance for me, knowing that I don't care how low that stock goes, I can sell it for 190. So that's where I'm at now. If I want insurance on my shares, that's what I'll have to do. But on the front end, I was an insurance salesman selling stock insurance to other people who wanted insurance on their stocks. So I sold them insurance, and just like an insurance salesman in real life, I got paid premiums for selling that insurance contract. So that's the way I want you to kind of look at that. Now, I'm going way off on a tangent here according to that question, but it just reminded me of another way to give you an example. All right, this person, this is what I was talking about, BIIB. And this is a very good insight here. This person said they had been paper trading credit spreads. They did a bull put credit spread on BIIB. And would you know it, the stock tanked 8% on 321. The thing is, other than the 2 lower days prior to that, there was nothing volume-wise to suggest that the stock would tank so much, and the general market itself didn't move during those days. So not sure how I could have gotten this direction so wrong. If I sold a bear call credit spread instead, I would have gotten it right, but there's no way to judge this. Is there something I should have watched out for, or is it just bad luck? P.S. I'm glad it was a paper trade, not real money. I've been having a hard time with the directional trades lately, but luckily I followed the 2% rule to the T, so any pain felt isn't too bad. First, I would say yes, it's bad luck. And 2, I've been having a hard time with my directional trades too, so it's not just you. And this person says, luckily they followed the 2% rule to the T, so any pain felt isn't too bad. I mean, I almost jumped up and down when I read this, because I haven't had anybody. This is exactly why we don't risk a lot on our trades, is because you want to minimize the effect your emotions have on you. You're not always going to be right. And if you invest 10%, if she had invested 10% on her total account on this one trade, she would be a big pile of emotional mess right now, and she would be kind of emotionally distraught, and she wouldn't be able to think clearly. And it's like what I talk about paramedics. You wouldn't want a paramedic coming on the scene if you get in an accident and you have an amputation. You don't want your paramedic coming on the scene frantic, freaking out because you're bleeding everywhere. You want that person calm, cool, be able to think rationally. And the way they, I'm sure they practice. I've never been a paramedic, but I'm sure in order to keep their emotions calm, is they practice and they go over and over again, and they prepare themselves for that. It's the same way when we trade. We prepare ourselves for when things like this happen. This is pure bad luck. I looked at the chart and I'm like, I would have gotten this trade. I mean, it's a good chart. It's been going up. So, there was nothing before this crash. There was nothing on the chart that could have told us that it would crash in price. Nothing. You could have if she had Winspear scenario, you could have been like, well, it's going to oversold, so I'll wait. But even when it popped up right here, it came from out of oversold and went to overbought. So this happened to me recently. It's like, it almost seems like every stock I got into just went the other direction as soon as I got into it. It's almost like somebody was out to get me. And, it just happens. Just chalk it up as just bad luck and then move on. So looking at this, yeah, there was nothing on this chart I could have seen. We could make up something, but, like they say, hindsight is 20/20. But no, nothing on this chart. I don't see, where she waited till it bounced off the trend line, bounced off support. It was a pretty decent entry. So the main thing is, like she said, following this, that pain she felt wasn't too bad. So it's like you have $10,000 in your account. If you lose $100, are you going to lose any sleep? No. You're going to look at it. You're going to be like, gosh, you know, bad luck. Yeah, I lost $100. Oh, great. I'm moving on. Now, if she had a $10,000 account and she lost $2 to $3 grand, oh, yeah, she'd be very emotional, and she might play revenge trading. Like every trade she makes after this, it might be trying to get her money back from the market. The market took money away from me, and I'm trying to get it back. So you get into that revenge trading, and you know what? You lose every single time. Every single time. Trust me, I know from experience. So that's that. All right, everyone. It looks like that's it. So thank you all so much for the questions. I don't have time for the final takeaways tonight. I got to end this call, but maybe I'll add them on our next call because they will be just as evergreen and just as useful as they were today. But the one last thing I will give you here is if you need some motivation. I literally listened to this YouTube channel for about an hour before the call. It's been a long time since I've seen somebody so great at motivational videos. Jenny passes along to me. You'll watch a replay. If you can't write this down right now, I don't know if this is another language, but this is his YouTube channel. Just type in this and you should find his YouTube channel. It's a compilation of different motivational videos. Very, very, very good. Highly recommend it. I mean, really, I couldn't stop listening to it. It is that good. So everyone, thank you for your time tonight. Time is your most valuable asset, so I always appreciate when you spend it with me. So you take care. Talk to you soon. Bye-bye.